The financial system is scrambling to put a lid on contagion. UBS to buy Credit Suisse in a $3.25 billion deal to end the crisis. What a great headline. Is the crisis over? According to the news, it is. From yesterday's video, we went through the top 15 US banks, and the top 15 US banks are not doing well. You might notice this white line, it's the SP 500. We're getting very interested in how the banking sector relates to an SP 500 sell down. So far, the SP 500 is holding its ground. It's not selling down, at least not yet. What about the top 10 European banks against the SP 500? We can see that when the SP 500 came down in March 2020, the banks were coming down previous to that. But notice we had this bit of a rally. This is very, very common before sell-offs. Why is that? Because the street, the average investor and the average trader goes short. The institutions don't like the street to make money, so they liquidate them. We can see the Credit Suisse has been absolutely decimated. And we also note that the European banks have got a lot of negative momentum. There's currently a flight to safety into the bond market and into gold and also into Bitcoin. We can see that oil is dramatically weakening. And when we look at risk appetite through junk bonds and high-yield corporate bonds, it doesn't look too good. In fact, Credit Suisse's $17 billion of risky bonds are now worthless. Stacking probabilities, we could reasonably say that there could be a lot of risk-off behavior in junk and high-yield corporate bonds in the coming sessions in the main market. We can also see that the VIX is starting to spike. Around March, we have a lot of volatility in the VIX, and this is a 20-year range time frame. We also have a lot of volatility around October in the VIX, the fear gauge of the stock market. An indicator of contagion within the financial system is credit spreads. And what we can see now, credit spreads are starting to spike. The VIX is starting to go up. These are all signals that we must be aware of. Many people were not aware of the signals in 2020. Their portfolios were decimated. The flight to safety into the bond market, the gold market, and the crypto market. Let's have a look at gold. We can see currently gold has gotten over a resistance at 1980. The major resistance has been between 2014 and 2025. If we go back to the global financial crisis or the GFC, we can see gold really rallied up as the markets were coming down. The VIX was spiking. Then what happened? Gold actually came down with the SP 500. Please be aware of this. That potential move, or that actual move, wiped off 224 days worth of gains in gold. Gold went on to bigger and better things, but if you were mindful of the fact that gold could sell down and you were borsogging really well, you would have done incredibly well. And that's what we're all about inside our community. Borsog is rule 621, buy on red, sell on green. And Borsog number 9 was actually sold yesterday. Borsog is an NFT available on OpenSea. We look at the VIX to understand fear inside the stock market. We look at the inverse move to figure out fear inside the bond market. And what is the inverted move telling us? It's telling us bad things. We can choose to disregard these things if we want. After all, the markets are coming up, especially in crypto and gold. But if you ignore it, you do so at your peril. You must understand guarding your portfolio is the key thing. Let's have a look at Bitcoin. Bitcoin did rather well in just the past half a session. We've seen it overcome resistance and come up to this smart money sell area between 27,843 and 28,380. Notice that each time price comes up to a smart money structural objective dynamic market structure line, what does it do? It pauses. And what we saw, Bitcoin couldn't get into this 27,843 range. So it came down and exploded through. But it didn't explode through, did it? Because the sellers exist within this area. If we don't have these lines drawn through the CTKS method, we just don't know what price is doing. Without the CTKS method, how would you know where price could stop, price could reverse, or price, if it gets over it, is actually a good thing? You would just be guessing. The question is, what happened to Bitcoin when the markets melted down, especially the SP 500? Bitcoin was created in response to the 2008-2009 global financial crisis. People wanted to say, we need an alternative to the banking system, and you can see why. And let's have a look at the only really big sell-off that's occurred inside markets. That was the 2020 sell-off. You can see that the S&P 500 came down 35% in 33 days. Bitcoin came down 63% in 29 days, but it came down 58% in just 6 days. Bitcoin actually bottomed out first, and we would expect this because it's a risk-on asset. It also recovered first. That's why it's critically important to be aware of what Bitcoin is doing. If you are buying on the right side of the percentage when you came down here, and that's not an easy thing to do, but that's what we're about as a global family, you would have done incredibly well. Of course, over time, but to do these things you must master fear, and that's easier said than done. Borsog is a rule that we live by, Rule 621, and it's not an easy rule. Our wired brains are wired for fear, and that means when we see red, most people just get out. They don't think of the opportunity, they think of the costs. What we do instead is we look at the red bar and say, wow, this is opportunity, an opportunity to get on the right side of the percentage. Rule 723 is master fear. It's a very hard rule to actually apply. When the bear comes knocking, we just push it out of the way with our positive attitude, our courage and our skills. That's what it's all about to be a professional trader. A lot of people don't actually understand the mechanics of a sell down. For example, Bitcoin is an option just like gold to the traditional financial system. Of course, Bitcoin is a pretty good one because you can do it instantly. Gold is a much harder commodity to get rid of. If you want to sell a bit of your gold to buy some milk, it is quite difficult. But you can actually do so with Bitcoin. But what actually happens when this sell down is occurring? What is happening is that people say, I'm really worried. I think this thing is going to zero and I need the money. This happens with every financial instrument. People get scared and they also get liquidated. And when people get liquidated, they have to find a source of funds to cover those liquidations. Please bear this in mind too. As traders, it's about timing the market. As investors, it's time in the market. The engine that is driving Bitcoin and gold up is the DXY's descent down. The DXY is currently 103.864, but it has major structural support between 102.991 and 103.178. The DXY is known to spike just as gold is collapsing. Coincidence? Perhaps not. Please let me know in the comments. As we're professionals, we have three-dimensional risk management thinking playing out at all times. Whether the market goes up, goes flat, or goes down, it's all on our radar. Because we've already made a decision what we will do if the market goes down, what we will do if the market goes up, and what we do if the market goes absolutely and utterly nowhere. This three-dimensional thinking is incredibly important. The market exists to desynchronize you. Desynchronization events cause funds to be moved between the synchronized and the desynchronized. Always remember that you cannot make the market do what you wish. The market is just like a 1,000-pound gorilla. It does what it wants to do, and it goes rampaging. And it can be quite irrational as well. Therefore, the way that you make your returns is through knowledge plus your courage. One thing to remember, price is always moving in a wave. It can get really choppy out there, but just always remember Rule 4. When price moves in a wave, it goes up and down all the time. One thing the governments are very good at is trying to mop up after a crisis occurs. They're not so good in preventing them. Many people expect at the next FOMC meeting, which is under 3 days away, that the Fed will not increase interest rates, but yet there's a 62% probability that they will by 25 basis points. I thought I would give you a more retail perspective on the S&P 500. If the Fed actually increases interest rates, what could happen to the S&P 500? Please let me know in the comments. I've given you a 200-day moving average, a 100-day simple moving average, and a 50-day moving average as well. We can see that the S&P 500 closed below all three moving averages. There's a tremendous amount of structural support playing out between 38.78 and 39.39. This is why the S&P 500 is holding so strongly at the present time. If there was no support or weak support around the current prices, we would have expected a sell down due to what is happening inside the main markets. We have our three-dimensional thinking at all times, and we can note that the next major resistance is 4,100. We can see that Bitcoin is just challenging that upper level resistance. And the crypto market, if Bitcoin gets through that, it will do very, very well. We always have our three-dimensional thinking at all times, and we've made our decisions in advance of what price action actually reveals. We look at the main markets because it's critically important to do. The Fed is already injecting liquidity back inside the system, and you can see that on the Fed balance sheet. What a spike up! And of course, that's been helping gold and Bitcoin's ascent. Rule 138, all investors become traders anytime they buy or sell. This is vitally important to understand. Many investors say, I'm an investor, I'm not a trader. And many traders say, I'm a trader, I'm not an investor. You're actually both, because you just do the same thing. You buy and sell. There are different mindsets for investing and different mindsets for trading, but gaining both mindsets is really, really important. There are always opportunities inside every single market. We pay a lot of attention to Bitcoin because it's the king, it's the ruler of the crypto market. Turning towards the greatest gainers in the past 24 hours, Conflux, Magic, Neo, 1inch, SSV, VET, EOS, and Flow. The greatest losers in the past 24 hours, FracShare, Kava, Aptos, RNDR, Render Token, TON, Mina, LDO, and TWT. But all of those, FracShare was the greatest loser, but that was under a 5% loss. Bitcoin sets the directional momentum, directional pace for the entire crypto industry. It's very, very important to understand how Bitcoin's gravity plays out on your beloved alts. You can see Ethereum, BNB, just matching Bitcoin's gravity. You can see that XRP is a little bit disconnected from Bitcoin's gravity, but actually is it? When we actually drill into XRP, you can see that it's basically following Bitcoin's gravity. It's going up when Bitcoin comes up, and it's going down when Bitcoin comes down, even though it looks like it's actually not. And sometimes you do get inversion, which is great because we're looking for that. But one thing to keep in mind, more often than not, what you will find is that your particular alt will absolutely follow Bitcoin's gravity. That's why it's critically important to understand if your alt is under Bitcoin's gravity, it could get whipsawed back into alignment. This is something that we look for. The weak become strong and the strong become weak. So just bear in mind that this directional correlation is very, very important, especially when it breaks. When it breaks, you always assume that there's going to be a reckoning, a reconsolidation of the gravitational alignment. We talk about this a lot inside the masterclass. Keeping your eyes on the longs and the shorts can be a very, very advantageous movement. You can see that the longs, the Bitcoin longs, the longs have been just pouring into the market. They are pouring in for a lot of different reasons. The major reason is Bitcoin is going up. We can also see that the shorts have lacked quite a bit of conviction recently. What does this actually mean? When one side gets overexposed, it can get liquidated. We're seeing a lot of longs pile in. If those longs get liquidated, we would expect negative price momentum. We're seeing a massive amount of liquidations inside the market, 125.67 million in 24-hour liquidations across 43,616 positions. It's not uncommon for weekend trading to be about 20 million and around the 16,000 positions. So a lot of activity is going on in the current space. Let's have a look at total liquidations across the past 24 hours. We can see 56% short, 12 hours, 65% short, 4 hours, 7% short, and the past hour going the other way. The longs are getting exposed. When too many longs pile into the market, it's easy for the shorts to take them out. But exactly the same goes for the opposite direction. Too many shorts in the market can create a short squeeze as the longs come in and whack them lovingly. It's important to note that the longs and shorts are always liquidating each other. If you're taking out one side of the trade under derivatives, you've got a very possible chance of getting wiped out. That's why we go long at spot inside our global family. The AI sector has been particularly strong inside the crypto market. And when we look at the AI sector, we're looking for signs of divergence with Bitcoin's gravity. And we can see the graph actually sold down quite recently relative to Bitcoin's gravity. We can see somewhat of a bit of a negative price momentum. It's still following Bitcoin's gravity, but we need to look at this because if the hot sectors start to sell down disproportionately to Bitcoin, that may signify a change in Bitcoin's direction. The same goes in the opposite direction. If we see these sectors heating up, we would expect Bitcoin to heat up as well. It's really important to cast your eye widely. Someone you know very kindly offered a CTKS partial masterclass scholarship. If you'd like to be part of the masterclass, please let me know in the link in the description below. Mastering our emotional control is very, very important. When people get into the market first, they enter the panic zone and the blame zone. That's before the knowledge and self-control zones of Zone 3 and Zone 4. It's very important not to gamble. Don't worry about catching every wave. If you've missed a wave, another one will be along shortly. A lot of people are unsure how to start trading. The first thing that you want to do is to narrow in to an area or a particular token, or it could be a stock or commodity. It doesn't matter what it is. So long as it has price action, you can analyze it. Let's consider a crypto, AGIX, one of those hot AI plays. When people first start, they see a chart like this and they say, I'm not quite sure what to do. The key is to get to know the personality of the crypto that you're studying, or the asset class, or the commodity, or the stock. You must know its personality. Another step that can really help is to understand what kind of volatility you're dealing with. When we look at AGIX, we can see that it can get really choppy, down 19%, up about 11, down 26, up 20, down about say 13, up 30, down 11, up 21, down 10, up 53 or 54, down about 29, up 44. You get the idea. You want to live inside the volatility, but the concept is, where do you actually place your buy and sell orders? The CTKS method actually helps quite intensely in this area. It reveals where smart money is buying and selling, where the algorithms will stick into price and support it or just collapse it down. How does it do this? It uses what I term objective dynamic market structure, and these particular areas or Stanfield zones or SZs are based on SLs or Stanfield lines and how they accumulate over different time periods. What we actually see here is that when a particular price point leaves a SZ, it's going to potentially go to the lower one. If it cuts through, go to the lower one. You get the idea. They bound and rebound between these particular SZs. It's a very, very good way to understand where the support or resistance is inside the market. Of course, you could do it like this, but that is really difficult to when it comes to placing a trade and knowing where your entry and exit are. If you would like to understand the CTKS method, it's available inside the CTKS Masterclass or by itself on the ctksmethod.org. I'd like to thank all the people who have reached out and filled out this particular form. It's really, really helpful to me. I want to understand what you need, and the only way I can do that is for you to let me know. This form helps me to structure the content inside videos each day, so it provides maximum value to you. We had a bit of a deep dive on positive excellence in yesterday's video. Unfortunately, there's no time to read out those comments in today's episode, but I will do it in tomorrow's video. One thing that could be really helpful, we're either focused on learning or we're focused on conflict, internal conflict or external conflict. If we're focused on learning and we have humility and patience, we'll create not inner conflict but inner peace, and not outer conflict but outer peace. It's a very, very powerful way to live. Why is that? Because you don't waste time. You're focused on what moves the needle forward for you. What you will find, it's all about habits. Success is about successful habits. Failure is about bad habits. Bad habits. But the truth is, you can't really fail in this world unless you give up. And how do you become a success? You don't walk through a magical door, you just change your habits one at a time. I believe the habits of dedication and commitment, persistence, they're very, very important. You can't just do things when you feel like it, because you won't feel like it that much. Life has always competing priorities, and there's always something shinier around the corner. But with dedication, commitment, and persistence, you can keep it something until you're an absolute master of it. The path to successful habits just starts with daily positive affirmations. Life is full of abundance. Scarcity is a brain-driven concept. There's no scarcity in nature. Keep on saying your CTKS creed each and every day. It's a life changer. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you tomorrow. Kate is my beloved wife, who is always here each and every day by my side. Take care, my friend, and have a great one ahead. Bye for now.